The central bank is now of the view that the country's financial sector may require structural reforms in order to stabilize the credit market and spur growth.
In terms of affordable credit, I will have to talk to her to find out what it actually means, whether it is 0 interest rate or 10 or 20, but we can always talk. But I think we need further structural change in the financial sector in order to deliver more efficiency and support growth and development.
This high-level economic growth forum, convened by the Ministry of Finance, Planning and Economic Development, equally notes that fiscal discipline would still remain critical for meaningful recovery.
The question, I think, over the last 3-4 years, we Ugandans must ask, okay, if there were external factors, they also affected Kenya, they affected Ethiopia, Rwanda. Why did they achieve higher GDP than us? And I think that's where the crux of the issue is, which we need to answer, and I think we shouldn't be diverted.
While decrying fundamental challenges within the economy in its present state, private sector players too warn that without better fiduciary conduct by government, the Buy Uganda, Build Uganda campaign will collapse.
I think everybody knows they take too long to pay. And with our margins that we're working with and with the interest rates that we have with the banks, it then makes a bit of a problem. So what we'd like to say, buy Uganda, build Uganda, fantastic, but let's also balance it out with payment when this actually happens.
Prime Minister Dr Ruhakana Rugunda offered the keynote address this morning, giving assurance that an effort on fast-tracking the country's oil production could generate momentum for growth.
Government has given priority to the commercial production of oil and gas in the western parts of the country. This includes investments in roads, power, water, and related infrastructure, such as the pipeline and the refinery, in order to facilitate oil production by 2020.
Reina Ojon, NTV Business.